Welcome to Upticks. I'm Jake Falcon, the founder of Falcon Wealth Advisors and your host of Upticks. Today is episode 126, When Will the Stock Market Crash? Okay, thank you all so much for joining me back on the show. I hope that you and your family are staying safe and healthy during this horrible pandemic. For today's topic, I wanted to talk about when this raging bull market will crash. I've been getting a lot of questions from clients lately saying, hey, Jake, in 2019, the market was up big, up way above the averages. In 2020, even with a horrible pandemic, a recession, unemployment going higher, the market was still up over 15%. When I'm talking about the market, I'm talking about the S&P 500, was still up over, 15%. When is this thing going to crash? And people are starting to get a little bit nervous, rightfully so. What goes up must come down. So I'm going to go into some of the things that we are looking at and paying attention to, and more importantly, things that we're doing to protect our clients' portfolios. But before I dive into that, I want to give a quick humble plug that to make sure to subscribe, the little subscribe button here at the top, so you don't miss another episode of Upticks. We are kicking out content every week. And so if you want to make sure that you don't miss a show and what's going on in the markets or financial planning, certainly don't miss out and subscribe. Also, if you're enjoying the show, I'd appreciate a thumbs up. We really always like that. I believe when you do that, the algorithm with YouTube or in the podcast platforms gets that in front of more listeners or viewers. And so that's greatly appreciated as well. Okay, so to answer the question here, when is the stock market going to crash? You probably know this. If you know me at all, you probably know what I'm going to say is that nobody knows. Okay, so if you get an email, a phone call, watch something on the news that the market's headed for a crash, it's probably wrong. But when I say that, I also don't want you to think that this thing is going to go up forever in a straight line, because we know it doesn't do that either. The market certainly goes up more than it comes down, but it does come down. In fact, it's actually normal, and it never feels normal, but it's normal for the market to have a 10% correction every year. And again, it happens almost every year, but again, it never feels normal. People always panic, or not always, but sometimes people get panic or they get concerned or they get scared when that happens. So are we overdue for that? Absolutely. Could it happen in February or March or April? Certainly, right? But nobody knows. So what can you do though, right? Other than trying to get lucky and time the market and say, Jake, take everything out. I think the market's going to crash, which would be the worst thing you could do. History's proven that that is by far and away the worst thing you can do, because not only do you have to guess when to get out, you have to guess correctly and when to get back in. And it's very, very difficult to do that. Nobody can do it, in my opinion. So what do you do? Well, the number one thing you do to prepare for an inevitable market correction, and again, a crash is a bold term, but a correction 10% or more, is that you want to rebalance. And that's something that we do for our clients at Falcon Wealth Advisors for them. So you don't have to worry if you're a client of ours, we're already taking care of that. But basically, if your stocks, the way we do it is if your stocks get more than 5% of our target allocation. So let's say we want 60% of your portfolio in stocks and 40% of your portfolio in bonds. If your stocks grow to be 65% because the market's up so much, we take that 5% because now you're underweight bonds, right? It's got to total 100%. So we take that 5% out of stocks and we go and sell them high, and we go down and we buy bonds or something else that's low, right? So that's the most prudent thing you can do. And what this does is it allows you to capture gains, sell something high, and you buy back into something low without being forced to time it, right? You don't want to get all the way out because you could be wrong, right? So it's the number one thing that you can do. Number two, what we feel is very important is by buying individual stocks for our clients, we are able to rotate out of some of those hot sectors that have done very well and provide a more evenly distributed allocation so that we're not just sitting on our hands and letting this bull market take certain sectors very high, because we believe that everything reverts back to the mean or the averages. So if it's way up here, it's probably going to underperform at some point to get itself back to the average. So what we're doing is we're looking at those sectors, primarily technology, that has done very well. And we're saying, okay, tech has done very well. Where can we capture some of those gains and maybe move that into industrials or healthcare or infrastructure, right? What can we do to maybe level out the portfolio so that it's not so out of whack or balance because certain sectors have far outperformed other ones? And again, if you're a do-it-yourselfer, I get it, but it is a full-time job. So you need to know what's going on in the market and the sectors and the outlooks and the leading indicators and the lagging indicators. But we're doing all that in-house for our clients at Falcon Wealth Advisors. I don't like outsourcing that to a mutual fund because, again, they don't necessarily have our clients' best interests at heart, and they don't know what's going on in our clients' lives with their portfolios or their retirement plans. We do. So we want to manage that in-house. Okay, so number one, rebalance the portfolio. Very easy. Again, we're doing that. If you have a 401k and you're a client of Falcon Wealth Advisors and you want us to take a look at that, please don't hesitate. Send it over. We can link it up and actually be able to look at it. But maybe it's time to rebalance that 401k. We're certainly looking at that in-house here. If it's time, we're going to do it. And then two, we believe in individual stock selection. So we are looking at our sector weightings and reallocating appropriately. Now, to turn it a little political also, and I kind of alluded to this already, it looks like the Democrats did get a blue sweep. And whether you're Republican or Democrat, that doesn't matter. What matters is, okay, so now we have a new, regime in Washington. Which direction are they going to take? I don't want you to think that a Democratic political party is going to make the market crash. People forget this, but I believe it was Barack Obama had 2 years where he was president, where he had complete control as well, and the market went up. And so just because one political party has complete power doesn't make it the worst thing ever. Now, in my opinion, and I've talked about this before, I prefer gridlock, and so does the market. So probably a better case would have been the Republicans winning the Senate. But as you can see, if you've been paying attention, the market didn't crash on that news. It already had that baked into it and is forward looking. Also, even though it's a blue wave, we don't feel like it's significant enough to get this game changing legislation like the new Green Deal or raising taxes for everybody. Now, on a quick side note, I think taxes will go up for a lot of people just because of the pure fact of all the stimulus money that's gone into the market. It's going to have to get repaid somehow, and taxes are probably going to be the way it's going to do it. So Republican, Democrat, taxes were going to have to go up at some point, in my opinion, right? But again, even though, like I said, the Democrats have the Senate, they don't have so much control of the Senate that a lot of these politicians are kind of drifting back into the middle, which is a good thing, in my opinion, so that we don't get this extreme legislation. So if the Republicans had the White House, a vast majority in the Senate, a vast majority in the House, that's typically a bad thing. Just like if the Democrats have the White House, a vast majority in the Senate, a vast majority in the House, that would probably be, not typically, historically speaking, not the best. So what do? Well, we take that and we say, okay, well, the Democrats are pro infrastructure, they're pro healthcare, they're pro cannabis stocks, right? So we'll look at those things and we'll see where can we invest in industries that may benefit from the Democrats' agenda, just like we invested where we felt would benefit from a Trump agenda, right? So again, that's why we like buying the stocks and bonds, because we can take advantage of that. And then what might not do well, the big tech stocks may face some headwinds because they may be looking at more regulation. So maybe, again, we'll continue to maybe stay away from some of those names. Companies that are subject to higher minimum wage laws may suffer, right? They may be forced to raise their minimum wage. So that might be some sectors that we want to shy away from or watch in there. And so again, all of these things are playing factors. And then if taxes are going to go up and you own municipal bonds already, typically their values will shoot up because they will become higher in demand, right? So those are all things that we're looking at and preparing for a potential market pullback or a different regime and what's going on. So again, don't take any of this advice. Full disclosure, again, this is what we're doing at Falcon Wealth Advisors for our clients. If you're a client and you have questions, certainly feel free to reach out to me or a member of my team, and we can set up a 30-minute call just to go over things, or we can do a full review. We're obviously available to do those as well. And certainly anyone of my other colleagues out there, happy to talk to you as well about your portfolio, your financial plan, and what we're doing to protect you from the inevitable pullback. Now, just because we think it's going to pull back doesn't mean, again, that we're going to cash in our chips and wait on the sideline, because if you get that wrong and the market keeps going up, you miss out on further growth in your portfolio. And I'll leave you with this last takeaway: is the beauty of our financial plans for our clients is the financial plans has bull markets and bear markets baked into the projections. So if you're following your financial plan, you do not have to time the market correctly. And it doesn't matter if you're 20 years old or 80 years old. We have bull and bear markets factored into our projected financial plans, and we have you set up with the appropriate allocation in stocks and bonds based on your specific financial plan to weather these types of storms. So I don't want you to think you have to time the market. We're not going to try to time the market, but we're also not sitting on our hands, right? We're going to rebalance. We're going to reallocate amongst the sectors, and we're going to look at what the White House is looking to do, and we're going to look at taking advantage of some of those sectors that may make more money because of that. And to us, that's what makes the most sense. Good. So hopefully this did provide some insight to you. Certainly, if you have any questions, let me know. That is all the time that I have for you today. Before I get into my fun topics, I do want to give a quick shout out to Corey Bittner, the other owner of Falcon Wealth Advisors. He has his own show called In the Money Insight that's kicked out weekly on our YouTube channel and out there on podcasts. And James Lewis, another one of our advisors on our team, has his own podcast called Financial Philosophy. So you're getting 3 organic sources of content coming to your friends at Falcon Wealth Advisors every week. And the best way to do that is just simply subscribe so you don't miss another episode. I'm also out there on various social media platforms. So I'm on Instagram, Facebook, LinkedIn, and Twitter. Please send me a friend request. I love expanding my network and connecting with more people. And our team is out there. We're on social media platforms as well, such as Instagram, Twitter, Facebook, and LinkedIn. Okay, for my fun topic, and we'll flash up some pictures here. Rachel and I have excitedly starting to do some home remodeling, and we have decided to put in library shelving in our great room. And if you've heard me talk about Rachel before on the show, she is a obscene reader, obnoxious. And I say that in a loving way. She read over 100 books in 2020, and that's normal for her. That wasn't like a record or anything. That's the norm. So we have a lot of books in our house. And so we're going to build these library shelves. I pictured us filling them up with books. Last night, I was informed that's not necessarily the case, that she wants to make it look artistic and classy and blah, blah, blah. I'm going to let her do that. I'm going to try to stay out of the way on that. But it's pretty cool. So I'll flash up some pictures. I've got some before and during pictures. Hopefully the project gets done in a few weeks, and I can share some of the final pictures with everybody out there. So again, thank you so much for tuning in. I hope that all of you have a great week.